Cool. And we are live. Welcome everyone to LunarCRUSH Live. We're live on Facebook, YouTube, Twitter, Periscope. We're even on Theta TV now. So we got some gamers streaming in as well. So really excited about chatting today. We got some awesome guests. We've got Chris and Hatu from DAO Maker that are joining us. I'm excited to hear what you guys are up to and kind of get in depth on some of the projects that you've been working with and some of your backstory on how you got into the space and just everything that you're working on. I mean, I know you guys we've been chatting for a while now, and you guys are working, on some social stuff, and I think it's going to be fun. So really appreciate you guys coming on. Obviously, you got John and I here for some commentary. But if you guys could just, tell us what you're up to, maybe Chris, if you want to start us. Kind of tell us a little bit about yourself and tell us a little bit about DAO Maker and everything else, and we'll kind of get started there.
All right, cool. Well, nice to have us. Thanks, Joe. So let me get introduced by myself, and that's how to do it. So DAO Maker is a company which was founded about 2 years ago. It started off as a Twitter channel called Ice Your Dog, which was quite crypto. The Twitter channel then went to Telegram. Telegram then became a community. Community became a company. Company rebranded. Company became an ecosystem, and we just keep on growing. At this point, we are about 20 people working part-time, full-time, and a gigantic community. I think on all platforms we have probably like 30,000 people signed up. We have about 6 projects which we co-invested early on, incubated their community. Now working on the platform for bonds, DICOs, shows, trying to introduce lower risk investments for crypto. Yeah, there's a lot of stuff. Then we have a marketing branch for help companies and other companies. Probably our most famous coin, which we're working on regards to marketing and consulting, is NEM. NEM is a very old coin. It used to be actually top 5 back in 2017.
Yeah.
Currently, we're trying to we started helping them about 2-3 months ago to revive their whole community using our software and our people. It's been going really well, and yeah, bull market is out, so something that everybody's been waiting on for a long time.
Yeah.
Obviously, me and Hatu are very tired, working about 13 hours a day.
Welcome to crypto. Very international.
Yeah.
Well, I do have a question for you, but we're gonna go Hatu. Just tell us a little bit about yourself and what your role is at DAO Maker as well.
So I would say I joined the space right at the peak of 2018. I joined at the end of Jan 2018. So I was probably the jinx the space was waiting for. As soon as I joined in, the market just crashed. But that was a great time from a learning point of view, because as everything went down, you could actually see in depth of what was the cause of it, what was the wrong aspect. And back then I was working more so towards also different projects in terms of coming up with the different metrics and economies they wanted. And the recurring theme was a lot of greed and misunderstanding of how a token should actually work. So I had an upfront view of over dozens of projects by being a part of at least the general advisory that was being given to them on how the token should be made. The teams were quite reluctant back then to kind of, nudge away towards the kind of suggestions you would give. They'd have advisors on just as like a branding thing. We have got people helping us. That's it. And then they had their own intentions. And by the end of 2018, actually around there, I met Chris, and we had a similar view of the space, which was on a lot of things don't end up going as they should, even though the space is a low entry barrier for making a lot of progress into virtually anything. We don't realize how easy it is to actually launch a project in this space, kick it off, get a huge user base. Just think of Yam, it kicked off and it had $1 billion almost in deposits in just 48 hours without even having any legitimate audits on the code. So that kind of gives you the idea of how easy it is to get something rolling. But a lot of projects never had the intent to actually make something viable. So then around early 2019, I met with Chris and we kind of formalized, and the ICO Dog brand became something called DAO Maker. It was still pretty early on. we had ideas on this concept called social mining, where the community could take over a lot of power decisions, which today now is called these governance DAOs. They're becoming very hot right now, but we're discussing this like pretty early on. Late 2018, we were already discussing it. In early 2019, we were already formalizing a concept for this. So the
Mhm.
social mining is actually a product based on that idea. Um, and that's kind of how it got kicked off, just by talking to Chris and then figuring out this maybe would be a good match of expertise between two people, and we kind of merged it into a concept. And since then, each of us comes up with different ideas, which we expand into products. And due to how low, the barrier for entry for any product is pretty low in this space, any product we kick off, it's not that hard to get adoption or usage for it pretty rapidly. And from that point onward, the primary aspect is just to scale it upwards. And I don't think we've had much challenges in terms of scaling, except for finding quality labor resources, I would say.
That's by far the most scarce resource. Fuck Bitcoin. 21 million, that's a lot. Try finding 21 million quality people.
When you say scale, because I'm curious, you say scale these projects. Are you saying from a community perspective, and is this just ongoing social management, community management? I know Chris mentioned you guys
Not
have
just
some tools.
Right, not just that. I mean more so from an internal point of view. A lot you'd be surprised from within a project. Often there's a lot of aspects they want to build out, but there's a lot of competition for people who are familiar with the space in and out and are competent enough to build what anyone wants to. So even for the product we want to launch and scale upwards, the number one challenge always is finding enough people who are within the space and then qualified for that role. Um, it's while a barrier for entry's role for any product, there's a lot of, I'd say, understanding you need to have in advance, not just what blockchain is, right? You need to know how the space actually works, because a lot of things are not that formalized as they would be in any other, I would say, industry. And people are typically not very familiar with this. If you onboard people from professional roles in other industries and you pull them in, it's a shock factor for them on how a lot of things work here. And
They don't.
you're
Yep.
right. And what you end up with is you end up pulling in people from within the space who are just kind of like hustling left and right. And when you put them in a formal role, they have a hard time handling it. That's the I think finding qualified labor capital is the number one
It's
challenge.
like the Venn diagram. Like we need the people who are crossing, and they're very rare.
And it's not just like us, any of the projects we work with, the number one challenge they always face is qualified labor capital. So much competition for it.
Yeah. Do you guys feel, I mean, and we're kind of in the same space with hiring, and I've kind of looked to the younger generation a little bit more, because it seems like, some of those folks, whether they're still in school, or coming out of school, maybe they came from a gamer background, maybe they know a little bit of code, maybe they bought NEM back in 2017, right? They bought Ethereum, they've done a couple of those things, and now they're coming into the labor market. And yes, they're very young, but they have kind of the pedigree that you're looking for to understand market first, and then kind of teach you a little bit more about how to market and teach you what a go-to-market strategy is, versus someone coming in and saying, well, I did this go-to-market strategy for Toyota back in 2016, and here's how you acquire users. It's like that will never compute in this space. It's like, well, can you just create a meme for us? They're like, well, what do you mean? How does that work? Right. So, and you guys, I mean, I'm sure you guys are in the same boat. So, like when you're launching or helping some of these projects do some of their marketing, I mean, how do you approach them with that language? How do you talk to them about how different it is and how they need to grow? I mean, some of these projects, they're in the space that they know, but what is your kind of pitch to them to say, we understand this market and we can help you grow?
Well,
Let me answer this one. Actually, we used to have a pitch. Let me answer this one. We used to have a pitch, but the pitch is now, look, we know what we're doing. We do it our way, or we don't do it at all. And we just go. Because to be honest, there used to be a long pitch, and there used to be a lot of time where we tried to explain and help. But I like to tell people who are not in crypto what is my job, and I say I'm like the tour guide for the Wild West. So just if you don't listen to what I say, you might get shot, and then you're dead. That's it.
I like that.
You might be like a big king in Europe, right? You know everything you're doing, but this is a whole new world. And
Sure.
yeah.
You got a point. He's got a point. And the attitude now he is more so tilted towards either the companies that want to work with us, either they get it or they don't. And if they don't, like you stated, if they're coming from a concept of a viewpoint where they feel this is like going to be launching a new Toyota car or something like that, then they're just not gonna get it. It's better to just ignore that concept. So that's kind of one way of looking at it.
I'd like to understand, because I know Chris mentioned that you're working with NEM, and that's a whole nother story that I'd love to hear more about. But when do these companies, projects typically come to you? Is it like they have an idea and it's like pre-ICO, or is it like they've hit a wall and they can't figure out their product roadmap? Is it is there a certain trigger that gets them to come to you and help?
I think those two.
Yeah.
I think for the new companies, obviously the new ones, if they're smart enough to realize that they need help, which is rare, then they come and they ask us for consulting, strategic advice. And generally for bigger coins, NEM is extremely interesting, right? Because it's such a huge ecosystem and it's completely different than running an ICO. There's people working on NEM over 6 continents at the same time, translated into 5 different languages. It's crazy. So there's a lot of different problems of running a big decentralized company, which is also very interesting. And the different levels of problems that you have to solve between ICOs and these huge companies like, I don't know, Bitcoin Cash, NEM, etc., are very different. And people just come to us because we're generally good at thinking crypto. And I think that's like its own skill set, thinking crypto.
It's more like an art. Like you said, you mentioned you want to hit the market here, you got to make a meme, not a strategy. Yeah, it's not a science or so. It's more like an art. It should kind of just be.
It's an art.
Right.
Right.
You got to be neck deep into the space, like 14 hours a day for every day for like years, and then you get the hang of it. It's kind of, that is the way to it, I would say. But when I was actually discussing about labor capital issue, I meant that it's not just for people we work with; it's also an internal issue. Just how scarce that is in the space. A lot of the times that we come up with any project, the primary discrepancy is that there's an information asymmetry with what people actually want in the space from a community point of view, because communities are the core of this, right? And what projects that are often led by highly qualified people, but they're just not familiar with the community here, and they do realize that the communities are important here. Well, at least those who have any hope, they recognize that, not just like we'll build and they'll come. Those are the ones that are doomed, those who believe that they're going to build something and people are just going to come to it. There's others that recognize that the community is important and they have a qualified team, but they have a very hard time grasping how the communities here are so different. And that's the conveying point. We have to tell them, like, there's a good chance that you have qualified people in terms of skill sets for making the products in a traditional space, but not necessarily here. And you need a lot of, I'd say, strategic planning on how to actually shift your product presentation, your discussion, and everything that you're doing essentially towards the space. It's something that Chris and I have talked about often, is that making a product is step 0, because there's so many ideas these days, and then there's a lot of technical capital to actually get the idea ready quickly enough. But then how to actually scale it upwards where it becomes into something that has demand, that's like 99% of the work, which is a lot of the times that's what companies in the space often overlook, that reality. And
yes, 100%. Even the smartest ones.
Right.
We
and
see
that's
that
where
too.
We
see that too. I want to make a point, because we see the same thing, and it actually correlates exactly to your resource shortage that you just spoke of. Like for example, we see that sometimes there's some good posts from some projects out there, but the frequency is lacking, and there's these huge gaps in between where there's no one talking about things. And the other times we see just absolutely lack of quality on some of these projects as well, where it's like did the intern just post on Twitter all day? What's going on? You can't build a community off of this thing. And so we see a lack of focus because these different communities are not facilitated by the projects. They don't understand it. So I like what you're saying. It's spot on from what we measure, for sure.
I think I also know the reasoning for it. because in crypto, if you're qualified in crypto, it means you have to be here for 2 years, right? I call it like a school year, right? You're grade 1, grade 2, grade 3, and it's like the Bitcoin halvening. If you have one halvening, you see the whole cycle. You're now in second grade. Now the people are new, all the noobs coming into school. So once you've been through a halvening, you kind of make one realization. It doesn't really matter what you do, because at one, there's going to be 3-4 months every 3 years that you're going to make a ton of money. So why don't we just chill, wait for that time, and then repeat? And obviously, it's not the same for everybody. There are people let's motivate and work very hard throughout the bear market so that we cash in. But generally speaking, a lot of people who are educated enough and know how the space works, this is their mindset. It's like, well, it's not work. Why should we? And it's logical because it's built into Bitcoin that it keeps going up. Well, let's see. At the moment, it's not, but at least there's these hype cycles. I think if people keep on having that mindset, it won't go up anymore.
Yeah, that's a good point. And I would say, so knowing that, knowing that perspective, what would be your advice to someone that comes into the space early on and that, hey, it's going to be a little bit of time before you can really wrap your mind around it. But how would someone increase that knowledge faster? So how could they dive in quicker? How could they understand, like, maybe what were some tips? Like, if you guys came into Bitcoin today, knowing what you knew, would you stay curious, read the white papers? Would you follow people on Twitter? Would you go to the websites? Would you try to launch your own project and just build something? Like, how would you go about it today?
That's a very broad question. I'm going to hit it on all spectrums. So the first one is the average person that comes into the space. They come in to buy in random, like the top, blue chip coins. And they come in with the promise, which is overly marketed, is that coins are going to give you financial freedom. And the irony is that we're at a point where there's a very interesting tweet by David Portnoy recently, which was that coins actually go down. So I'm leaving, I'm going back to stocks. Stocks only go up. So if that's the narrative that the space is shifting towards, we might actually have a hard time pushing it forward to the retail market, because it's the excitement of, look, there's so much volatility here and you're going to benefit off it, no longer applies to a world where stocks have far more volatility and a lot more unverified upside than coins. So that kind of traditional pitch is not going to work as much. So that's something that Chris I and the rest of the company is working on, how to make the space a bit more exciting again. And that's, I believe, what the DAO is. The concept of DAO actually came out of, I was looking into, I think, late 2019. There's a huge growth into equity crowdfunding. And token sales were basically dying off, which I found was pretty disappointing.
And the Bitcoin people are.
Sorry, I couldn't hear that.
No, sorry. I was actually pulling up your comment here about Dave. I'm out on crypto because coins don't always go up.
Right.
Stocks, on the other hand, continue to always go up.
It's not even true.
Well, nowadays it's very true. So
yeah, of course.
That pitch of Bitcoin giving you financial freedom is not gonna be in line when people feel like, okay, there's actually downside volatility here, whereas the S&P 500 only goes up. So I think the different view of it is what we're working on right now. So like I was saying, around late 2019, I was looking into, tailwinds were kind of really dying off, and we were discussing internally, perhaps we should shift to equity crowdfunding market, because it's the similar kind of skill set, early projects.
Yeah, that was funny.
Yes, and after I did like several weeks of research into it, and instead of just keeping it on my head, we actually published it, right? I wrote this huge document which kind of showed the stats comparison between tokens and equity crowdfunding. So virtually 99.9% equity crowdfunding campaigns gave the investors a return of 0x. I mean, not 0.1x, 0.2x, just straight up 0x, minus 100%. Yet it keeps growing. The space keeps growing. More and more money goes into equity crowdfunding each year. Meanwhile, despite all the scams in crypto, the aggregate return was over 100% thanks to the thing that did good. So if you put your money into every ICO ever, you'll still be positive. I'm talking all the massive scams that came out, it'd still be positive by a lot. You'd beat the S&P 500 for sure. So
I forwarded to you, so.
right,
Yeah, I'd love to see that.
definitely. And at that point, I had an epiphany. Like, okay, so clearly there's definitely interest, and it's more so towards excitement at early stage products where people want to join in. The retail wants to really join in, but they're getting the absolute trash quality of equity most of the time. Because within the equity space, what you have is anything that's viable goes to the top level, right? What happens is people want to go and have a network towards their product market. And the best way to do so is pull in large institutional investors who will promise you the money you want, but they'll also promise you the access and exposure and network you need to get your products rolling. Retail typically doesn't do that. And I'm going to jump into this in a bit. So any equity that's good as in terms of opportunity goes to the large scale VCs, angel investors, and institutional investors like Apple.
Yeah, so you go like Shark Tank, then you go to like Silicon Valley VCs, you go to like VCs, and you go to funds, and then you go to shitty funds, and then you go to equity crowdfunding websites.
Which is basically you get the absolute trash, which is anything that could not raise any valuable capital from proper VCs or anything like that. Those companies.
And they sell it really well. Like you go there, you want to buy every single one of those companies, and we're pretty professional investors.
Do you guys believe that there's a difference there between potentially companies that have some sort of like physical product, though? I feel like some of the crowdfundings, that have been somewhat successful as far as the number of investors have been some sort of like physical product versus like a piece of software.
Yeah, but the reality is they do sound better because people feel like, oh, this is a product I would actually use. But they actually, like I said again, for the factor that making the product is very easy. People forget that in today's world, okay, I come from a family that has a supply chain background. Making anything is very, very easy, right? The tough part of a business is actually making it scalable and actually building a business out of it, which is what most of these companies failed when they presented to the early VCs. So what the retail gets is the rejected material, right? But no one else wants it. That's what retail gets, which is why virtually never they never make money out of it. Either most of them never reach a point of liquidity, they just go bankrupt, or it's just an absolute failure. And at that point, I realized that why aren't people going for token sales? And then it became pretty clear. It's just the idea of an equity sounds a lot safer. It gives you the rights and protections that you think you may have, but mostly fluff. And they end up losing all their money. And that's when I figured, okay, so for people to come back towards token sales at a larger scale, there has to be a mechanism where they feel they have certain levels of protection as they seem to feel with equity. But with token sales, they'll actually get quality stuff because most of the large institutional investors and VCs, except for just a handful, they don't join in tokens. So as a retail investor, when you get access and exposure to token sales, you're actually getting the high quality stuff. Well, it's all put into one big basket. It's up to you to figure it out. But it's not like you're off limits to the good stuff, which is
finance was open to everybody, right?
Right. Finance. And we had this
like
just happened now, and I think it did a 70x, and it's a very high potential product. And it was open to everyone. There was no limitations.
Elrond, Orion, like a lot of these things,
even
they would be snapped away.
Yeah. So tell me a little bit about that. I do have your page open here with the dynamic coin offering with Orion. Talk a little bit about what you guys are doing here and how this works.
Right. I want to go more into this exactly. So the whole point of this was that it brings in the safety factors that people felt. My goal with making the DAO was that how can people feel the same level of safety they do with equities, but actually have it. So DAO works in such a way that the project gets funds up front, but they have to hit certain KPIs in terms of performance of the token, because that's what reflects product viability, market interest, and everything. Without making it a security, because essentially tokens are being sold off as a product. So if the product is refundable, then the one issuing it has to be held liable. So the way it works is that we take custody, and 20% of the capital raised is given to the company. They're given milestones which the project can choose across a time period. In case of Orion, it was 9 months, 12 months, 16 months, per which if people are feeling the company is not delivering upon their goals, they can ask for, they start asking for partial refunds. And the funds that get refunded, those tokens end up being burned off. So essentially, any excess tokens that were unwanted from the sale are just removed, because think of it as they're permanently refunded. This is what kind of tied into the basis of why people were going into equity sales. They wanted that protection layer. Well, now they have it, and that's where the growth aspect of this space is, in my view, because if you take into the dynamic that coins, like he said, and they report now, can go down, but stocks only go up, and people are not going to be interested in stocks unless they feel like, okay, wait, here's something I never have access to in terms of quality, early ventures in the equity space, but I do get access to quality early ventures in this token space. And I do have, in fact, better protection here than I did in terms of equity. Well, now you're beating it on every level.
Essentially, we tried to take the best of tokens, which is hyperliquidity, accessibility, and equity. Now, the thing about equity doesn't actually give any protection. It just sounds like how to mention protected. Unless you have like majority shares in a board seat, it's irrelevant if you have equity or token, you completely have no right whatsoever. Right? It's absolutely makes no difference. But it sounds, people are not educated usually financially. So they find, okay, token is scam, equity is good. It's not true. Here, we basically have different tiers of risk, and what we want to introduce is high risk, 100% risk investments, 35% risk investments, 20% risk investments, which would be like a standard DAO, because you can refund 80% of your money, and even go so far as having 0% risk investments. Because what we have here in this industry is like hardcore gamblers. We don't actually have a lot of investors. People who know what they're doing at this point. We have these new token sales. They own like $1-2 million market cap. Simply because people know that they need to have initial liquid pumping material, but it's still hardcore gambling, right? It's not about, okay, I want to invest into the future of this project and scale it up. It's like, I want to get in, out, and flip. They could go to the casino. They could do whatever. It's the same thing. If we want to introduce real investing to retail, you have to be able to reduce the risk so far that people are willing to potentially lose some of their money. Because if you make 3K a month, you cannot afford to lose 2K. That's your rent. So we had to make a framework in which we can make it so that you can take the risk of losing 1K, $500, by having a high quality selection of projects, which we have been building on for a long time, and a system where we can have up to 0% risk, which means you're just risking, you're literally not risking anything, which is something we're going to announce in about a month, a new project, which is very exciting. So we have 35% risk, which is DAOs which have existing project protocols or some kind of feasible product that is selling and making revenue. And then we have DAOs which have 80% refunds, which is basically proof of concept or some kind of demo, but no real revenue, which is 20% risk. And then we're going to announce in about a month the 0% risk investing, which is really interesting.
So tell me a little bit about some of the jurisdictions that you guys are doing this in, and you know, because when we talk about equity versus utility token, and you know, at least here in the United States, where you know you have a utility token and there can be no expectation of a profit or increase in value from something like that, which the utility token is purely based on creating utility for the project or the company or whatnot that's using it, almost like a Starbucks gift card that has value that you can exchange for dollars, right? So is this, knowing that you're kind of talking about it, like saying that people are expecting
it's an investment, right?
From that. Yeah. So are you guys doing this in the US or are you doing this abroad?
So right now, nobody's doing this. We're not doing it in the US because nobody is actually doing anything with the US. But technically, we checked with several lawyers. The beautiful thing about a DAO, it doesn't actually promise profits. What it does promise is you're going to lose 20% of your money. Right, but you're not going to lose more than 20%. That's not a promise on profits at all.
Right.
So we don't do DAOs in America because for Americans every token is a security. So the DAO might as well be a security.
Right.
However, we do definitely tend to open up the American market in the next few years. Try to change regulations in that direction, because the real scam is equity. equity crowdfunding, which does get hundreds of these people and thousands of these people wrecked. I think we made the research. I opened it up. In over 800 raises, there was only 16 exits. So 16 times people didn't. Basically, if you don't have an exit, it's 100% loss. Right? There's not a lot of companies. I don't know a lot of ICOs that did 100% loss. There's a bunch of 99, but rarely is there like 100% loss. So from the 16 that are not 100% loss, we have a 0.35x, a 0.2226x, and a 0.03x. So minus 70%, minus 75%, and minus 97% on the average of those 16 exits. So we are trying to produce a framework which brings more security to small people, which is exactly what security laws are for. Right? That's why they call it security.
Yeah, and I like that you guys are going after this market because it's kind of the underlying piece to a lot of what crypto is democratizing investors' ability to get in on good value companies at early stages that otherwise only accredited investors could get in on, right? And getting in on, it doesn't matter, if that person has $5 to invest or $500,000 to invest. How is that person with $5 to invest ever going to get ahead if they don't have the same optionality, right? And so it's working towards that, and that's why it's such a, it's unfortunate and it's a little sad that here in the US they're kind of dragging their feet and not understanding this, and it's kind of a protection for a class of people that have access to it. And so within crypto it seems like there's a lot of projects that are building really cool stuff, right? Like they're trying to launch tokens, they're building cool projects, but I haven't yet really seen anyone it's trying to really focus on this piece to it, because it is such a big piece to it and there's a lot of regulation there, but it is a gigantic market.
Yeah,
definitely. The interesting part of what we intend to announce in about a month is that I can totally understand why projects tend to go from the equity side with large VCs. Chris mentioned that most of the people in retail want to gamble with the money. They're not there. They don't have the long-term mindset. But I think it's a generalization. There is a segment of retail that does have that, which is why we launched a second form of token sales called strongholder offering. And the primary purpose of that is to kind of strain out the people who are not interested in just gambling on day one.
Yeah, for sure.
Feel that there's a long-term viability and interest in their project. They want to stick around. They want to help it grow. Now that is something you're getting closer to what a VC would offer you, right? They don't want to exit you on day one. They want to stick around for years to come. They want to help you grow. Well, now there's a second aspect to this. You want people with a certain skill set, because what a VC does is they the best VCs, they don't just bring you the cash. They get you the network you want. They even help you acquire the labor capital you're having a hard time getting. They can open up doors for you and all the stuff that you actually need for a product to grow. But that doesn't mean that only a VC can provide this. I mean, if you can find a quality 100 people, proper professionals with a strong network, or just they're interested in the long-term viability of a project, and they become the investors, now you have almost a decentralized VC funding you. And that's something we're trying to build up with the strongholder offering combined with social mining. So you mentioned about social mining earlier, and that's a system that has ripened over 2 years. There's like tens of thousands of people signed up, but there's only a handful or a small percentage there. If you have tens of thousands, a small percentage, 5%, is a substantial number of people who are highly talented in terms of development, biz dev, legal affairs. It's so wide, right? Now, that's a segment we want to grow, make a lot more scaled upwards. So take these few thousand who are highly talented and make this tens of thousands who are highly talented. Combine that with the strongholder offering, where you can assess and monitor who's actually interested in the long-term viability of a project, where not only are they holding on to the tokens, they're also providing secondary market liquidity to it. All this, we're measuring it. And we're building, an index of each of these, a merit index and a holder index. And our intent is to then target the equity market with it eventually. And we're going to make more statements on this later on. But I don't think the equity market is lost in that sense. I just think that the token market is a lower hanging fruit to bring a lot more opportunities to people and bring in more retail. we had a lot of people. I haven't seen this in a long time. We just did a strongholder offering for OPT, and a lot of people made very silly mistakes. Like they sent money from exchanges, they sent money from Nexo, they sent money from.
Which is like, do not. I agree. I did not send money from non-custodial. I agree. I did not send. A lot of money got burned. Like
a lot of people end up making these mistakes, which we definitely need to work on. But that's good. That means we got fresh retail interest into the market, which is something we were hoping for. If we can provide that kind of protection, then there's that excitement that was missing. You don't have that excitement in blue chips. A lot of people are like, yes, Bitcoin's going to go from 12K to 20K, and I'm sure that's going to happen, and that sounds great. But most likely the S&P 500 is going to match that growth because it did like another 60% in the past 3 months or something like that.
Yeah. Well, it sounds like people are just sending money from where they have it, right? They're just, I've got it here. I don't want to have to move it somewhere else. I'm just going to send it to you from wherever I have it. And that could be a multitude of wallets and locations. But I do want to get back to the DICO a little bit. And maybe you guys can tell us a little bit, or maybe you're not ready to release it. But I mean, 0% chance of loss in this. I mean, can you tell us a little bit about it, or?
Can't. I mean, it's
no.
very
But it is legitimately, you will deposit, you will invest money, you will without having any risk, which means you will deposit money. I'm going to give you these tips. You're going to deposit money. You will be earning tokens for that money, but that money will never go to the actual company, and you will always be in control of it. That's all I'm going to say.
Think of it like
I'm excited.
I haven't thought of a perfect name for it. For now, I'm calling it a swap bond, but I'm excited to release it. I mean, but I wanted to
call
get
it a
back
credit default swap. That might be a good terminology to
credit default swap. That hits you can lose virtually everything and more. Let's not go to that. Yeah, but like the point I was trying to get towards was that the growth in the large caps is not going to bring new interest because they're not exciting anymore. You have way more volatility in the traditional market now compared to coins. It's the opportunity to participate in early ventures which are actually good quality. That's going to be the exciting factor.
Yes.
Which is why our new projects, like the motto, the understatement, will reflect the key point that we're going after. It's also under the ropes. Maybe within a month we can kick it all out, and we're pretty excited to roll it out.
That's awesome. And so you guys have started down this path, and you've worked with a lot of projects. And is this something that you've kind of seen over time based on some of the learnings from some of the projects, or some of these new projects that are coming to you saying, we need a different way to do something? So you guys kind of just formulated this through some of the work that you've done with the projects and just what's working and what's not.
Well, it's a mix of understanding that, but also we don't just go like, okay, I got a good hunch and let's just go for it. We actually look into, observe, and research before kicking out, like proper research aspect of the R&D, not just develop first. Like I said, we looked into this, went over the venture market for the retail, and I could see that while the token funding is just substantially dropping out, equity crowdfunding keeps growing, which means that the excitement is there from the retail side to participate, but they're learning that they're not getting any return out of it because it's consistently a zero.
But they're not learning it, right? Because it takes a few years until they realize.
Right, but he's got that. There you go. But the wider space isn't really spreading out because they can see that, okay, it's typically a 0x. That's something tokens can easily outdo. Now, that was the first layer, which we were like, okay, let's add the protection system that they feel in equity, but actually make it here. Now you have room to bring them over in a mass scale. Now, there's a lot of licensing needed for this to expand it to that level, and we're already working on it. We are, like you said, the jurisdictions we're working. While the U.S. is obviously off limits, we applied many months ago, for fiat processing licenses in the European Union. I think we expect to have it cleared in December, and now we have access to the very large market. We've also kicked off several Asian markets already. Everything in this segment will need a lot of licenses, which is costly, time-consuming. It's a process. The last frontier would be the U.S. because that would be very expensive to get the kind of licenses that you need over there. But it's eventually down the line, one of the markets that we intend to hit.
So changing gears just quickly and kind of thinking a little bit about some of the other stuff that you guys are working on and guerrilla marketing and everything that you guys have on the site. I mean, talk a little bit about some of the projects that you've worked with and some of the marketing that they've done, maybe even tactically that's worked well and maybe why you think it's worked well. And then maybe some of the stuff that you see out there that you don't think works as well as far as scaling and user growth.
I would say that a lot of the stuff on the site is a bit from our early days. We don't do individualized services like that anymore. We kind of take on entire projects who want to scale into the entire space, and guerrilla marketing kind of fit into the stuff that people do. Because you don't have a lot of formal channels in the crypto space where you want to push out your products. A lot of formal channels, in fact, often ban crypto ads. A lot of formal channels that do put crypto ads, people are just doubtful of them because so many scams tend to be there. They don't have very large established media in it. So the primary aspect of reaching out to the vast user base, believe it or not, one of the ways would be 4chan, right? So a lot of it will qualify in it from a traditional point of view as guerrilla marketing, pushing content, information through different Twitter feeds, different Telegram feeds, Reddit feeds, all that kind of stuff. That fits into guerrilla marketing. Hitting the user base right where they are is a lot more different in the crypto space than it is in traditional markets, where you run a remarketing ad through a Facebook pixel and you're done. That does not work here.
Right.
Over there, if you want to reach any market segment, it's primarily going to be through absolutely unorthodox manners. And that's where guerrilla marketing kind of comes in.
Right. Which kind of circles back to what we were talking about at the beginning a little bit, and finding the correct people that understand that and how to create the content and write the content for these different types of channels, which is a very difficult thing to do.
Narrative.
It ends up being hard work. It just ends up being hard work. There's no magic post. There's no one thing you do. Frequency is incredibly important when you consider how global this community is. You can't post at one specific time and hit everyone properly. It ends up being something that is very difficult. And the challenge, even we've seen it on our own side. The challenge is we can't just wake up in the morning, have a plan of what we're going to do, and be done. A lot of how this space moves is real time, and so you may have a general direction of what you want to do, and then you wake up and then Bitcoin's down 800 points, and Polkadot is live today, and you end up having these things that happen that you had no idea when you went to bed the night before, or even an hour ago. Then there's some, Federal Reserve announcement that just impacts the market at random. And so how do you guys deal with that, with these projects, with dealing with real time, with all these different brands?
Okay, that's where the important aspect comes in, that nowadays when we work with a project, it's not so much as us taking a very particular service. And instead we just take a major portion of their operations internally. So if they want to launch suppose they're about to do the token sale, or they're about to do a major mainnet launch, or entirely new product is coming out, we wouldn't be like, okay, we'll take over the content for it. No, we will take over its premier presentation to the market. So it's kind of under us. And that's because a lot of companies are not built to be that flexible, especially once they become large enough. But we kind of kept that nimbleness. I often get it from my team that I change my mind every 5 minutes on what we need to deliver. And that's because I tell them that, we have different news coming out every 5 minutes in this space. So you completely change what you need to put. So we often have to redo the entire plan that we had just to adjust it. But the general idea,
daily.
Every day.
It's ridiculous, which allows us, we have to be, if you want to run successfully in this industry, you have to be able to perform. Like, every single person has a specific skill set, like a coder, a designer, a writer, whatsoever. They all need to be at the absolute best of what they can do, because it's extremely difficult to just throw away all your work and start over right away and change your plan and be ready in 4 hours. And that can be a weekly thing.
When this becomes back, this is back to your guys' original point. I think Hatu made the point of resources. because if we have to operate, all of us, in this way, it means that someone that you're contracting a certain number of hours, certain times of the day, now all of a sudden that it's a scope change constantly. Even when your clients are hiring you, it ends up being, you think something's going to take 10 hours at random, it just took 50 because of a market change. And so it's
Or
a
it takes
difficult
two.
thing to manage. It takes two, right? Or it
Yeah.
takes two. Very difficult thing to manage.
Totally agree with you on that. There's a very interesting paper, economics paper by Robert Shiller. He won a Nobel Prize for it. It was on narrative economics, and I think it applies to crypto very well. Also applies to Tesla stock, which was that market bubbles are very much hinged upon narratives, and the challenge in crypto is that the narrative of any segment can change so rapidly. 5 minutes is probably a bit of a hyperbole, but you might have a plan for a certain month and you might have to rapidly change it depending on the narrative of the time. And you have to be able to properly mold around that narrative to maximize your benefit of it. When the DeFi, hype started building out, a lot of projects um, start shifting their goals and products and roadmaps. And people give them criticism for it, which in my opinion made no sense. They should
Right.
target what's working and not continue to target what's not working. It's like telling someone, it's like a factory that was, I'm going to give a very extreme example, but let's just say there's a factory that was working on horse buggies and the steam engine comes out and they want to shift to it. And you go criticize them. Hey, why are you not sticking to the horse buggy? How dare you go after the steam engine?
I think adaptability is the most important skill any company can have.
Right. You should encourage them. Like, yeah, you're doing good. That's a good decision, but you're adapting to what seems the most plausible direction for the wider space. You guys in the US, I'm giving an example because one of my favorite examples is the brand Abercrombie. They get a lot of heat these days for their branding, but a gun shop for hunting materials, and now they sell clothes. A huge shift over the course of 100 years. They've went through a lot of different product markets, and they just adapted to whatever they felt was the right time to sell the right thing. And that's how a lot of the startups, especially the startups in this space, should be. So the narrative of the time changes aggressively, especially in crypto.
That's a great point, and I think it's kind of the core of when we talk about Bitcoin, right? And there's Bitcoin maximalists, right, that they call them, and it's if you're so married to that, it's going to be the only one, and nothing's going to survive past it. You're really just fighting innovation. You're fighting adaptability. You're fighting change, which is really the core value of even Bitcoin before. Right. It's almost like it's very surprising that someone is a Bitcoin maximalist, but isn't like a fiat maximalist or a gold maximalist. Right. Like they don't want to adapt and change, but you have to if you want to continue into the future and change. So, well, very cool. Well, guys, hey, we're coming up on the hour. I really appreciate you guys coming on and talking a little bit about the company. If you guys want to talk, just where can people find you? Twitter, site. I'll pull the site up as you guys talk, but I really appreciate you guys coming on, and this was great.
Right, sounds
They
good.
can find us at.
Interesting point though on Bitcoin. I've had this point often before. I've voiced it through our space, through our Twitter account, which is at the DAO Maker, and that's a lot of people tend to give a lot of criticism to Bitcoin maximalists, but I feel like it's a very critical part of the space. Even with DeFi, much of DeFi is built around at the moment centralized dollars like USDC, USDT, and all that. So I go like,
Right.
you can't have a decentralized finance based on centralized money forms. You have people have to recognize that Bitcoin is kind of like step zero. It's layer zero, with decentralized money, and you have to treat it more so that. And we should be moving towards a point where it's more and more the DeFi space is integrating more and more of Bitcoin, because that's where you kind of have the first building block, decentralized money. You can't say, well, we run on USDC and USDT Tether. We're totally decentralized finance. That's, the first step itself is kind of not in the right direction. So all the DeFi space can't overlook Bitcoin completely. Have to recognize that that's the hardest money we have in this space, the hardest decentralized money we have in this space. It's the most liquid, well accepted one. Just tossing it aside and operating on Tether for every other Lego block that builds into DeFi kind of builds a tower that could fall.
Right. Couldn't agree with you more.
Yep.
Right.
So it was good having us.
Yeah.
Right,
So
so
the
let's
account
wrap it
is at the DAO Maker on Twitter.
At the DAO Maker. Exactly.
At
And
the DAO Maker and DAOmaker.com. Chris, Hatu, thank you guys both so much for joining, and thank you to all you folks listening in.
thanks.
Happy to
It was
be
good
here,
having
guys.
us. Yep. I think Joe dropped out.
Okay. Cool. See you guys.
Bye-bye.
Bye, guys.